And without any further ado, let's get you up to speed with some fresh analysis. Anthony DePaul, the Senior Private Client Advisor at Pacific Securities, joining the program now live. Warm welcome to the program. Your thoughts just into now some specific questions on stocks, but before we even go there, Anthony, just a volume pulse check today. How are things looking?
Well, state of calm in the market today. You know, we traded within a range of 5,250 points to 5,290. We're seeing continued buying in some of the risk-on sectors, with continued selling in the risk-off sectors, with gold underperforming today. You know, the likes of Newcrest Mining being down 3%, and also the utility sector underperforming. So it really is giving us an indication that as we lead into the Brexit referendum, there is a state of calm in the market, with the odds of a Brexit decreasing.
Well, there's a state of relative locked on reality to the register at Premier, PMV, the ticker code. So not a terribly liquid play in that regard. The move today higher, a rally of some 3%. What would you put that down to?
Well, it's interesting. Premier Investments actually has exposure to the UK through their Smiggles product. By the end of this financial year, they should have about 50 of their 205 stores globally in UK alone, and they're looking to open up 100 Smiggles stores in the UK by the end of this calendar year.
And just for the uninitiated, what is that? What is Smiggles?
Well, Smiggles is a high margin stationery brand targeted towards 5 to 15-year-olds. They've got the product in Australia. That's the major part of their stores. They've got it in Singapore, they've got it in New Zealand, and they've just embarked on an expansion into the UK, where over a period of a few years, they're looking to open up in total 200 Smiggles stores. So that has actually underperformed during June, going from a high of about $16 down to a low of about $14.40. But as the odds of a Brexit has decreased, some money is starting to flow back in to Premier Investments and their high growth Smiggles story. Yeah,
you're talking high margin there, but what about on a Remain story for Britain, for instance, the idea that there's going to be a wave of fresh trade and you know, merger deals struck? That's only going to bid up, is it not, the value of real estate and the rental market in these key markets will only get pricier, not cheaper. Yes or no? And that'll be a crimp on margins, not a benefit, not a boom.
Yeah, good point. Well, actually, full credit to Premier Investments management. And when we talk about gross margins have actually expanded over the last few years. And in fact, year on year, their gross margin expanded 1%. The beauty about their Smiggles stores is that they're low capital intensive. We're only talking about a small store with high margin products. So those Smiggles stores, they're very easy to open, very easy to run. You know, the management, they've got a fantastic track record. We're talking Solomon Lew, inducted into the International Retail Hall of Fame, the ex-director of David Jones, Mark McGuinness. These guys know what they're doing. They've been around for a long time. Everything they touch seems to turn to gold. They've got cash, $280 million in cash to continue rolling out those stores. These guys know what they're doing. In fact, I read a comment a couple of years ago when he went into the UK. Solomon Lew said, "We have the model now, and in the future, we feel with Smiggles, we're going to be looked at in the same light as Disney and Lego." Now, you don't make those calls, those big, bold calls if you don't know what you're doing.
Yeah, meanwhile, no mention made, but I mean, I'm sure it's bubbling along nicely, thank you very much. You know, the Peter Alexander offering there into those same markets, you're getting a feel for traction on another one of their marquee offerings, or how's that playing out?
Yeah, when it comes to Peter Alexander, that is another high margin product for them. We're talking high-end pajama brands, and you know, the margins on that are quite appealing. They do want to expand. Whether they go into Europe and what countries they look at, these guys do an enormous amount of due diligence, and the clothing space is a saturated market, so they have to make sure that they've got a niche. They have to make sure that they've got a competitive edge. And if we look at Solomon Lew's track record, they're not about to make any rushed decisions. You know, even with Smiggles, they could have very easily ramped up the rollout, but they chose to do it over a period of 5 to 10 years, and they're quite calculated in terms of how they go about it, and I would appreciate that they would probably do the same for Peter Alexander in Europe.
Anthony, Jeremy Hook at TMS Capital, another stock I know that you've been watching, Challenger Financials, had a very good run, investor update last week. What do you like about it?
Oh, it's all about the annuities growth for Challenger. We've seen that with the ageing demographics in Australia, a lot of those baby boomers, looking to retire over the next 10 to 20 years, that ageing demographic is going to help the demand for these guaranteed retirement income streams and annuities. They're Australia's leader in that field. They make their own products. The banks haven't really shown any desire to compete against them. They do have a monopoly on the market. And in 2015, they got on some very large platforms, Colonial, Victorian Super, which are massive in terms of feeding them a lot of additional annuities sales. And we expect additional platforms to come on board over the next 2 to 3 years, which should really help the company's outlook.
It's drifting back towards its yearly high of 965 in May of this year, at 924 today, rallied up 0.7%. What's your target on that one in terms of looking a little toppy?
Well, when you look at the technicals, yes, that would make sense. It's really right at the top of its range, but the fundamentals, the industry dynamics and their position in that industry is very strong. So we would expect that plus the support that they're going to get from the government. There's been some tax incentives for people that put their money in capital preservation products effective from the 1st of July 2017. We would expect those drivers to really help that company push past its highs and be a standout in the financial sector space.
And the environment where they do best, just paint the picture of when these annuities come into their own. What's the checklist?
Well, they're very good at funding those liabilities with very strong investment decisions, whether it be through fixed interest and cash, their property portfolio, A-class commercial property. They're very good at working out how best to fund those liabilities. There was a few concerns leading into the February reporting season with credit costs going up globally due to global concerns.
Yep.
But at the February report, they showed that they were able to overcome that very nicely, and that's why they've gone in a very short period of time from a low of about 670 up to where it is today in only a period of a few months.
Yeah, Anthony, Jeremy Hook again. I know when we looked at it around that $6.70 to $7 zone, I was also impressed by how large Fidante Partners was as a funds management enterprise, and it's been a good contributor as well. But equally on valuation, I guess, Carson, we had a look at it when the Investor Day came up, and I thought maybe it would look a bit overvalued in that mid $9 zone. But really the upbeat nature of that presentation and the way that the management team, each of the divisional heads presented, I think would have been the reason why Anthony as well is probably confident about their future.
Right. The presentation's key, right, at that point. An update, mood music, if you get it right, you're there as a true believer. Anthony, thank you so much, appreciate it.
Thank you.
Anthony DePaul, the Senior Private Client Advisor, Pacific Securities there, live on our Sydney CBD.